Welcome to the fifth Student Loans Update mini webinar for our Student Loans Updates mini webinar series. This is part of the Get Savvy, Grow Your Green Stuff overarching webinar series. My name is Andrew Pellegrini, and I run the University of Illinois Systems Student Money Management Center. I'm joined by my colleague, Nikki. Nikki, do you want to introduce yourself?
Sure. My name is Nikki Jankola-Shanks, and I am the policy director for the Division of Banking at IDFPR.
Thank you, Nikki. So we were going to launch this poll, but in the interest of time, we're going to just go ahead and launch forward and talk about our objectives. So our three main objectives for today is we want you to understand the consequences of non-payment for student loans. We're going to discuss the on-ramp transition period that's been introduced by the Department of Education for return to repayment. And then we want to remind you of your options for managing loans, especially if you're at risk of non-payment or you're struggling to figure things out. We just want to put together some reminders for you. And as with all of our previous webinars, we want to provide this disclaimer that information about federal student loans is rapidly changing. So what's discussed in this webinar is current as of November 17th, 2023. General information is going to be shared, but we can't really provide financial advice on specific individual situations, but we can guide you on where to get your questions answered. So for understanding the consequence of non-payment, so interest is accruing, capitalizing, and compounding when you don't make payments while in an in-repayment status. Your loans become past due or delinquent the first day after you miss a payment, and after 90 days of non-payment, your servicer will normally report the past due payment to the 3 credit bureaus. However, the on-ramp that we'll talk about later, that on-ramp transition period, is providing a little bit of leniency to delinquency and default. And after 270 days of non-payment, your loan goes into default, and there are a lot of different consequences to default. So this table is modeled after an amortization schedule to show that if you don't make your payments, the balance will keep going up because the interest will accrue and compound. So even if you're on the save plan, if you're required to make a payment based on your income and you don't, then interest will accrue and compound. The only way that any interest is waived is if you make an on-time payment. So you got to make sure that you're making payments regardless of the repayment plan that you are in. Your loan, as I said earlier, becomes delinquent the first day after you miss a payment. And even if you miss just one monthly payment and then start making payments again, your loan account will remain delinquent until you repay the past due amount or make other arrangements such as getting deferment or forbearance or changing into a different repayment plan. For a loan made under the William D. Ford Federal Direct Loan Program or the Federal Family Education Loan Program, you're considered to be in default if you don't make your scheduled student loan payments for a period of at least 270 days. That's about 9 months. So after you go into default, there are a lot of consequences. For example, they can be very severe, and they include the following. The entire unpaid balance of your loan and any interest that you owe becomes immediately due. This is called acceleration. You can no longer receive deferment or forbearance, and you lose eligibility for other benefits, such as the ability to choose a repayment plan. You also lose eligibility for additional federal student aid, like the Pell Grant or additional loan options if you would go back to school. The default will also be reported to credit bureaus, which damages your credit rating and affects your ability to buy like a car or a house or to get a credit card or sometimes even get insurance because it goes on your credit worthiness. Your tax refunds and federal benefit payments may also be withheld and applied toward repayment of your defaulted loan. This is called a treasury offset. Your wages will be garnished. This means that your employer may be required to withhold a portion of your pay and send it to your loan holder to repay your defaulted loan. Your loan holder can also take you to court if they so choose. You may not be able to purchase or sell assets such as real estate. You may be charged court costs, collection fees, attorney's fees, and other costs associated with the collections process. And it may take years to reestablish good credit. So there's other things that may impact you, but these are all in a normal situation. Right now, we have a couple programs that can help you if you've gotten into default, or to prevent you from going into default during this next about 12-month period while we're transitioning back to repayment. So one of the programs that's available is a Fresh Start program. So if you were in default prior to the repayment pause, you might be eligible for this Fresh Start program to get the default resolved and reinstate your federal student loan benefits, or apply for another repayment option, or consolidate your loans, or apply for deferment or forbearance. So this can also be helpful for your credit if this is something that you are in. This is your situation where you have loans that were in default prior to the repayment pause. This would be very good for you to check out. So we also talked about deferment and forbearance as tools to avoid the consequences of non-payment. However, interest will still accrue with both deferment and forbearance, especially for unsubsidized student loans. If you're in school deferment and have a subsidized student loan, like an undergraduate subsidized student loan, no interest will accrue for that type of a deferment in that situation, but it all varies depending on the type of loan that you have and the type of deferment or forbearance that you have. You do have to work with your servicers to see if you're qualified. There's a lot of information on the federal student aid website as well. We also talked a lot about this in our previous webinar that is recorded. And it's important to remember, if you apply for deferment or forbearance and are granted it, there's a limited time that's available to you, and your monthly payments could increase when repayment restarts again. So those are all things to keep in mind when thinking about non-payment, the consequences of non-payment, and what your options for relief are if you can't make a payment. And I'm going to hand it over to Nikki to talk about the on-ramp transition period.
Thank you, Andrea. So the on-ramp transition period, you may hear this if you have, well, it's only for federal loans, right? You may be getting emails from servicers or seeing things from the federal student aid office saying the on-ramp to repayment. So we're going to kind of break that down and talk about what it is and what it is not. So the best way to think of to repayment is to think of it like a grace period. And what that means is typical consequences of not paying your student loans will not be enforced until after September 30th, 2024. Andrea, thank you. So what is a grace period? Typical in typical times, not right now, not during this on-ramp, but in a typical standard loan, if you have a federal direct loan or a federal family education loan, you would get 6 months grace period. So if you don't pay for 6 months, there's a grace period. This is particularly this is for 6 months post graduation. So maybe you graduate, but your student loans aren't due until 6 months later. So that's the grace period. That is also for 9 months for federal Perkins loans. So the on-ramp period, all right, if you miss a payment, normally your loan is considered delinquent. Those delinquencies are then reported to the credit bureaus, even just one payment. Unless you're in that grace period after graduation and things. During this special on-ramp period that's for a year, the administration is automatically, if you miss a payment, they're going to take your loan and put it in forbearance. And what that means is that your account is not going to be considered delinquent and your missed payments will not be reported to the credit bureaus. Um, the automatic forbearance, I know we had a whole webinar about forbearance in one of our previous webinars. So if that's something that you want more clarification on, I encourage you to go to the YouTube channel for that. But basically, you don't have to do anything during this on-ramp period. If you miss the payment, it's going to be automatically happens, which ultimately means your loan is not going to go into default, which is what Andrea was talking about. And it won't be sent to collections. The very, very important thing to stress is that this sounds like, oh, so I could not pay my loan and I'm not going to have any consequences for a year. Like I could not pay this loan and just keep going like I have for the payment pause. It is not the same. It is not an extension of the payment pause. It is very different. In the biggest way is that your interest is going to accrue. During the payment pause, it did not. So now, your loan is going to get bigger every single time you miss a payment. The purpose of the on-ramp payment is to alleviate issues that are typical, that are a result of the payment pause. For example, a lot of people change loan servicers and they may accidentally, for a month, the first month back, pay the wrong servicer, forgetting to switch to the new servicer. So they didn't want people to be punished for that, right? You may accidentally pay the wrong amount. A lot of people's payments have changed due to different consolidations and switching onto different payment plans, etc. So again, nothing to be dinged for there. It is not to just not allow people to not pay their loan. So the time frame, as I've said before, for this on-ramp period is that it's going to last for a full year. So October 1st, in October was the first year that the first month that payments were due. And so that'll be through a full year till September 30th, 2024. So this gives people time to make sure they have all their ducks in a row as they're paying. If they accidentally pay the wrong amount to the wrong person, they need to consolidate, whatever it might be, it gives people that time to make sure that they're all T's are crossed, I's are dotted, and for that adjustment period. But I just cannot stress enough that it is not another payment pause. So the one thing that I also want to stress is that we've given clear guidance about what happens with your interest accrual. And what I mean by that is your interest maybe is capitalized, right? Andrea showed us an example of how your interest grows. There has been nothing said either way that if you do miss payments, let's say you miss 5 payments because you're like, I'm just not going to pay right now, I can't pay. We don't know if on October 1st, 2024, your interest would be capitalized and you may have to pay all of the interest that you missed. Sometimes that does happen with loans. And we have not been given a clear direction if that is going to happen with this on-ramp period or if it is not. I'm sorry, I have a little cold. And then this all may then increase your monthly payments. So if you have this interest, this capitalized interest, you're owe more, so therefore you're going to have larger payments. So that's just something we really want to make clear, that we unfortunately don't have exact guidance yet on how everything with missed interest and missed payments regarding when the on-ramp period ends will be. So it's important that if you're struggling with making your student loan payments, that you go through other ways to try to lower that instead of just not paying, because it may end up hurting you in the long run. So your loan servicer is where that can help you with a lot of this. That's where you're going to make your payments on your student loans. That's also where you could go to request changes to your payment plan. So like I said, if you're struggling with your loan payment, it's better to try to see what options are available to you that you can maybe make work with your budget, as opposed to skipping lots of payments. That's also where you could apply for student loan forgiveness. There are programs depending on what career track you're in, that you may qualify for a type of student loan forgiveness. You could also apply for a loan cancellation. That's also where you request your deferment or forbearance, and you can discharge your loans due to permanent disability. So your loan servicer is really where you're going to be able to, that should be your main point of contact to get this stuff completed. With that said, we also highly advise you to do it online as much as you can by yourself, because the wait times right now are very, very frustrating for people. But a lot of loan servicers have changed. These are the 6 federal loan servicers. This is it. So if you have federal loans, one of these 6 is who you are paying. Unfortunately, there was so many transfers during the payment pause, and I wish I could say everything went perfectly with that, but we all know that it didn't. So just make sure that you're really checking who your loan servicer is, because there is a high likelihood that it could have changed. And if you aren't sure who your loan servicer is, all you have to do is log into your student dashboard on or your borrower dashboard on on the federal student aid website, and it will list who your servicer is. All right, so we always like to leave you guys with some action items, things to do and things to think about. The first is that knowing the difference with knowing now fully what delinquency and the on-ramp period is. If you can't pay your student loans, really think about exploring a deferment or forbearance options. You could do that again on your borrower portal or your servicer's website. The on-ramp period can definitely help with this, because as you figure this out and you make switches, you know that nothing's being reported to the credit bureaus or anything like that. The other thing is that if you were in default prior to repayment and the interest pause, so 3.5 years ago now, you should look into the Fresh Start program. The Fresh Start program is there for borrowers who were in default prior, so make sure that you're taking advantage of that program. And lastly, if you want a discount on your interest, make sure you set up ACH, which is automatic debit payments with your servicer, you put it on auto pay, you're going to get a discount on your interest. And as always, please stay in contact with us. We do have, I apologize, student loan update. We have our entire webinar series is up on our YouTube page. So if you missed one or you want to review any of the information, you can go up and take a look. And I know Andrea will be sending out a follow-up email that has the link to the presentation and some other resources as well. And are there any questions? If there are any questions, you could feel free to type them in the chat.
And if you can't think of any questions now, you can always email studentmoney@uillinois.edu. That's where the login instructions email came from for today's webinar. So we do have one question: how long will the Fresh Start program last? So Nikki, you might know this, but when I was researching it yesterday, I was looking for like a time frame and I couldn't find one on the FSA website. But since you work more closely with the FSA reps, you might know.
I wish I had a clearer answer for you. I apologize. I'm just quickly, I believe that it may start to end when the on-ramp period ends as well, like to enroll in it, because again, that's kind of goes a little hand in hand together. But I have not seen a like drop dead date. I do not think though it's a program that will like last forever. This was a very specific program that was set up in response to help borrowers who were in default, and then the pandemic happened. So
Well,
I'm
and to
sorry I don't
give
have more info.
for some historical context, even prior to the Fresh Start program being available, if you were in default, you could work with your loan servicer and FSA to rehab your loan and become eligible again for a lot of the benefits of federal student loans, like special payment plans and deferment and forbearance. But it took a lot longer and there were more criteria in order to resolve and rehab that loan. So it could be that this Fresh Start program is just going to be here temporarily, but that doesn't mean that all options for rehabbing a defaulted loan goes away. Any other good questions? Well, again, if you think of the questions later, you can always email us at studentmoney@uillinois.edu and we'll do our best to get back to you. We're going to kind of keep this one a little bit shorter than our other ones, other webinars, but we will make the recording available as soon as the captions are edited. So thank you again, and I'm going to stop the recording.